Hello folks, this is Raj Sastry from Raj Option Trading. Today I want to talk about my favorite small cap stocks. I love small cap stocks because they kind of, outperform the bigger market. So with that, today is March 30, 2021, and we will talk about few small cap stocks. Here are some images from these companies. One is AgEagle. They got a drone, unmanned type drones, and we got LifeMD, which will help the doctor visit virtually, and they're doing pretty well. And then we got retractable technologies. These guys are into reuse. Basically throw away one-time use type syringes, infusion instruments, and whatnot. And then we got here ClearPoint Neuro. They're into non-invasive type surgery to help with the patients. So with that, if you really look at the advantage of investing in small cap stocks, they beat the institutional investors because they have a lot of growth ahead of them. Even though they're volatile, they tend to do very well if you hold these stocks for a long time. Think about spotting next Tesla, next Apple, or next Amazon.com. We can find such opportunities if you look at these small cap stocks, which is often ignored by these big money managers. So with that, let's go into some names here. We got 23 stocks here. All of them are less than $500 million. And as you can see, these are very small cap stocks, and stock price is not too much. It's affordable by many folks. We can buy the stock outright, or you could even buy call option. And I think for these small cap stocks, because we're going to keep it for a long time and participate in the growth and beat the market, it's always suggested to buy the stock outright. That's the best way, because normally these stocks will go up and down, and if you buy a call option at a higher price, you might get into some issues around the um, money being lost with the call option. That's why, because of the volatility, it's good to buy the stock outright in these scenarios. So with that, we'll touch on some of these companies. The way to read this table is really, we have the ticker symbols, we got company name and price, and this is organized by um, 1 year return. The company on the top, UAVS AgEagle, has got 1700% return over last 1 year, and it's in the descending order. Next one, LifeMD, 1636% return. These type of return you cannot expect in a large cap stock like Apple or Microsoft. That's why that's the benefit of these smaller companies. You can pay a small amount and still participate in the market and get a very good amount of return. And many of these stocks, as you can see, they have pulled back hard from their 52-week high. And I also highlighted few things. For example, companies like AgEagle, they got a large short float ratio. So that's why we got to be watching out a little bit. As you can see here, stock is up 1700 for last 1 year. But if you really look through this, 3 month return negative, 1 month negative, 10-day negative, 5-day negative. So as you can see here, as the stock comes down, these shorts will kind of cover their position, buy back at a lower price. So that will result in new buyers coming in and pushing the stock up. That can cause a short squeeze of companies like AgEagle. And I got short interest itself highlighted in red. That's one thing we always watch out for. Then I have valuation, like price to sales ratio. For AgEagle, it's high, so I would watch this out a little bit. And next one is here, Profound Medical, little bit high. This is not too much; it's manageable. So with that, I will kind of point out a couple of these things I have highlighted here. Nautilus, AudioEye, they have got at least this one, Nautilus. It's got a high short float, and it's got also some of these performance has been a little bit lower, so that's why many of these shorts will cover their position, and stock may go up, and we might get into short squeeze. So those are some opportunities to look at. So with that, what we'll do is we'll look at couple these stocks in a little more detail. All of these stocks are good. Also, one thing I always made sure is we have a sales. These companies are not without any sales. There is a sales itself. They make revenue. Some cases it's very less, like AgEagle, $1 million. Trailing 12 months, and in many cases we got some good revenue. So that way, these are not just companies with no revenue. So, and also we got good revenue growth. See, these are positive revenue growth. That's one thing I always look out in some of these companies: a revenue to begin with, and a revenue growth, and a very good performance, and also a good positive gross margin. Those are the fundamentals of this selection here. So with that, let's go into few companies here. First one is AgEagle, so symbol UAVS. And this engages in design, distribution, support of unmanned aerial vehicle, and primarily for precision agriculture industry. So I think this industry really needs some help, and this company provides these precision unmanned aerial vehicle. So stock price is very low, $6.10, low market cap 358.69, revenue is 1.35 million, and good quarter over quarter revenue growth. This is something that we always look out for. And the stock chart, as you can see here, they have not done too much, couple years here. But sometimes last year they caught fire. They started going up and up, which is always a good story. And now they're pulling back a little bit. So, this is where, as the stock pulls back, this could be a short squeeze type scenario. Shorts are kind of unwinding at this point. Now they're kind of sort of in their normal growth trajectory here. So I think somewhere now it might, start making a move up. So that's why it's good to invest a little bit. Stock is very low price, and, hold it for a long time. And if you look at, the market cap here, over the last 4 quarters, market cap has been increasing. It's 6 million to begin with back in 12/31 2019. 3 months from then, same 6 million. Then it exploded to 58 million. 9/30 September 30 2020, it became 134 million. Now they're into 358 million. Clearly, they're doing something right. They're grabbing the market share and growing very nicely. And when it comes to sales, before you go to sales, if you look at the price, also stock price from 45 cents to 41 cents, then it became $1.19 back in June 30th, $2.28 back in September. Now it's $6. Look at the appreciation here. Stock almost tripled in like 3 months or so. Then we got, 6 months. Then we got quarter over quarter revenue change. It's very nice. They had a little bit, hiccup back in 6/30. Probably this is the COVID-induced pullback. But overall, otherwise, all the other quarters they've been doing very nicely. Good amount of cash, 25 million, which is not bad at all. And free cash flow is negative, something that we watch out. Not too bad. They have no debt, as you can see here, but that's also nice. Good gross margin, and net margin is negative. They're still not making money. And good price to sales ratio is a little bit higher, but I think it is not too high. It's manageable. So with that, I recommend this company. Right now they're on a pullback. You could buy some and keep it for long term. Next is LifeMD. LifeMD is a telehealth company. I think many of you know Teledoc. This is a little different, different niche, and these guys offer portfolio of direct to patient product and services. Help with the virtual treatment, prescription medications over the counter, and network of licensed physicians offers telemedicine services. So this is where this kind of helps with all this COVID, virtual doctor visits and whatnot. So stock price is $15, which is not too bad at all. Market cap is pretty decent, $408 million. good revenue and very nice revenue growth. From a stock chart perspective, as you can see here, they haven't done nothing for a long time, but last year they picked up with all this, even before the COVID. I think they picked up a little bit in the, even before that, but COVID really accelerated their growth and they've done nicely. And if you look at the market cap on this company, very nice acceleration, from 12.31 1919, $6 to $11 20 211, now it's 408. So very nice acceleration. That's telling me this company is doing something right and grabbing the market share. And share price also very nice increase. It's almost doubled here from 1231 to 331, and again did nicely here. More than tripled here, and again same trajectory. Very nice share price growth, and sales is also very nice. It's pretty constant between 1231.19 and March. It's constant, but now they picked up, which is good. And nice quarter over quarter sales change. They got some cash and some debt, which is manageable, and nice gross margin, and still not making money from a profit perspective. That's why a negative net margin. Price to sales ratio is really nice. It's not a high. It's not high on valuation. With that, I would recommend this stock on any pullback. I think now we have a pullback here. Could be good to buy some and keep it for long term. Next, let's look at retractable technologies, ticker symbol RVP. These guys are into safety needle devices. So, many times with the healthcare, all the doctors and patients, they work on these needles all the time. You got to be very careful with this and make sure these are pretty safe, and you don't, we should make sure there's no reuse of this. It should be like one-time use, and this company helps with those type of needles. And they also have some easy point needles, vanish point, blood collection sets, and whatnot. With that, this is a very good area because health industry needs these type of one-time use type needles to eliminate cross contamination. So stock price is $12, which is very very low price. Market cap is 471 million, revenue 62 million, which is nice and good quarter over quarter revenue growth. So with the stock price, has done pretty nicely over last year or so. Now there is a small pullback. Could be a good buying opportunity. So with that market cap perspective, as you can see, your company is doing nicely. There is a good acceleration here, all the way 49, 50, 231, 225, now almost 427, which is very nice. And nice sales. There is a sales acceleration also, and good quarter over quarter sales change, good cash, some debt which is totally manageable, and gross margin is positive, 51%. Net margin is also positive. This company is really making money. They are not losing money. And price to sales ratio, this is a valuation ratio. This is not expensive. This is very much very nice price to sales ratio. So with that, I recommend this company. You could buy some and keep it for long term. Next is Nautilus Inc. Many times you all have this situation. You want to buy some fitness equipment. It's not there. You can find it anywhere. This company helps with this provision of fitness products. Operates through direct and retail segments, and they also have direct to consumer type advertising. So it's a good business, and if you look at the stock itself, it's a $14 stock, which is very less expensive. Market cap is 462.37. It's a good market cap here. Low small cap. Revenue is very nice, 552, and quarter over quarter revenue growth is 81%, which is also good. So with that stock chart itself, this one has got ups and downs a little bit, but overall trend is up, as you can see here. And they got double top, came down. I think now they may be looking to go up again. And market cap itself, I like this nice acceleration here: 77, 227, 277, 519, 550. Now it's a little bit less with this down tick here, but I think this company will do well. So with that, sales itself is pretty nice. There's a very good acceleration in sales, very good acceleration in stock price, and they have good amount of cash, some debt which is completely manageable, nice gross margin, nice net margin. Company is making money. Valuation perspective, very low valuation. So I would recommend this stock also. So so these stocks, because these are long, these are a very small cap. It will be volatile at times, like you're seeing right now. You could buy the stock somewhere here, and you might be wondering what's going on, but then it makes its move up again. So that's the nature of these small cap stocks. They're a little volatile, so you got to keep it for longer term, and should not trade these in and out, because these are meant to keep for long term and gain that capital appreciation and beat these market averages. So with that, next one is AudioEye. This company helps with the provision of digital solutions. Many times, many of these companies, they will need solutions to convert from one format to other format. For example, you might have MP3, you might want a different format. So this company helps with all those conversion of these multiple digital formats. So with that company itself, stock price is $26, not too bad. Market cap is low, 280. Revenue is 20 million, which is very much a good revenue, I would think, for this size company. There is a very nice growth, which is 56%, and stock itself is doing very nicely. I like this chart. They've been doing consistently well. Last year they took off a little bit, which is nice, and there is a nice market cap acceleration: 39, 91, 144, 276, and now 280. Very nice steady eddy type stock here. And stock price has been increasing consistently over last quarters. All the way, there is no downtick here, all the way up. Sales is pretty nice, good sales growth. They do have cash, some debt which is completely manageable, good gross margin. Company is still not making money, because margin is negative at this point, and it's not too expensive from a valuation perspective, from price to sales. So with that, I would recommend this stock. It's a steady eddy type stock, has a pullback now. It's good to buy some and keep it for a long time. Next is ClearPoint Neuro. So this is into commercialization of innovative platforms to perform minimally invasive surgical procedures in brain and heart. So I think this is a good market. Anytime you have minimally invasive surgical procedure for brain and heart, which are very crucial, I think if they do right, company can really help patients, and in the process they can make good amount of money. So with the stock price is $19, and market cap is 404. Nice revenue here, 12.83, good revenue growth, and stock price has been appreciating pretty nicely here. Took off last year as usual. I think company is doing nicely here. Some pullback here could be a good buying opportunity. Market cap steadily increasing, as you can see here. Very nice acceleration, steady eddy. Stock price is also doing nicely. Little bit bump during COVID, but otherwise it's doing nicely. Nice sales and sales growth. Good cash amount. Debt is manageable. Little bit high but manageable. Nice gross margin. Company is still not making money, losing money. Nice price to sales from a valuation perspective, not too bad. So with that, I recommend this company also for your long-term portfolio. Buy some, keep it for long term. With that, let's quickly jump into summary. So this is the total list of 23 companies, all small cap, less than 500 million. There is a positive sales growth, as you can see here. There is a positive sales. They do have sales, and I look for positive gross margin, which is always good, and nice return from a 1 year return perspective. It's all solid 1 year return. many cases these stocks have pulled back hard from their 52-week high. Basically by looking at this 1 year, 6 month, 3 month, you can see the trend here. Many of these stocks off late have pulled back a little bit, and some of them have got short ratio. If they pull back hard, short ratio is high, that can cause the short squeeze. So with that, I recommend many of all of these companies to be upfront, because these are nice companies. They got revenue growth, have done very well in last 1 year. And I think overall, these small caps will outperform the large cap stocks. With that, I wish you a very happy trading and investing. Thank you very much.